Good evening, everyone. So it's been a pretty disappointing week in the markets as far as data is concerned. We just reached a 4-year high in the Dow, I think it was on Tuesday, and then since then we've just had disappointing ISM non-manufacturing, a non-helping ECB meeting, and a poor non-farm payrolls, and this has led to a sell-off in the stocks, and bonds have reached new highs. And just going to have a quick look. We're just going to have a look at the Bund quickly right now. And this is just a 60-minute chart just to illustrate what's been happening. And as you can see, the volatility has been increasing lately. We've formed a floor above 140 now, and we've just been progressively going higher. You know, before, every time we sort of got into the 140s, we sort of just retraced that one there. We had one here. This one we got a bit into it, and it made a start of a retrace, but it didn't, continue it. So, and then after that, pretty much just went straight up. And if you try to basically sell any of this, you'll probably be in a bit of trouble, really. You know, this was the one when we first broke 141, and we came off a good 100 ticks over there. But again, coming back up, if you try to fade any of these rallies, it's been a bit painful. And we've actually reached 142.14 high today, and right now we're trading on 142.05. And believe me, I never thought we'll get this high in my wildest dreams. But it looks like these Bunds might have further to go, especially if these stocks continue to go down, especially from the lofty levels that these US markets are at. So it's something to definitely keep an eye out for, and I think probably the best play right now is probably just buy the pullbacks, unless we have some continuous good news coming in from the market and some sort of ease up in the yields in Europe. So that's what I'll be looking out for. If we look at the 2-10 spread, if you can see, we were trading around this 390 level, and then we sort of broke through. When I spoke to you last, I think we were trading 362, and again, I was thinking risk to reward play, go long here. Could have made a little bit out of it, but if you're trying to run it, it would have been stopped out. But again, it's I think 10-15 tick stop on that, and the risk to reward was there definitely, but it didn't work out on this particular occasion. And now we sort of found support around 328, which is in line with this falling trend line that we have over here. But now again, looking at the Bund where it is, and you just think anything good, and we might get a 100-point rally here, so it might be a good play to go long over here. But again, hasn't really worked out if you've been doing it in the past 2-3 weeks. So if anything, if it reaches like 362 or 90s, I'll be looking to go short and try to go with the trend rather than against it. That would be the play that I think is a bit more safer than what we have right now, because it doesn't look like anything is letting up in these markets in terms of the direction of the Bunds and new safe haven buying. So that would be my play on that. So right now, just looking at Euribor, I've got 2 small positions on right now. I'm basically long 6s over here and trying to get out 6.5s, and tiny position here, long 4.5, trying to get out 5s. It's been a pretty tough day, just been churning around these and not really doing much, and up just about 200 in Euribors and 50 quid in the short sterling, so didn't really manage to do much today. But I'm hoping these positions will come my way, and that will sort of make it a bit better anyway. But I don't think I'll be able to get out tonight, so we'll see how it goes on Monday. But just want to bring to your attention some pre-non-farm payment payroll moves. And if we look just before trading this number, sort of Japanese yen, and if you can see, this is the 1329 bar, which was 1 minute before non-farm, and we had a massive spike. Good. Let's just see what it actually was. 65 to So a good 50-point spike there in the yen just before the number clearly leaked, and then we had the move, and then we had a massive fade, and then we had the continuation move the way it should have gone. And if you look on the Euro stocks as well, same type of thing. Just before the number, we had a 8-point spike down in the Euro stocks. Then the number came out, and we had another further 11-point spike down. Then we faded fast and hard to the upside, which would have caught out many people, I reckon. And it's probably these people that got the number before, just pushing up the prices before it actually went the way it should have been. So in terms of trading this non-farm payroll, especially if you're trading it in direction which it ought to have gone, it's a very difficult one. And I think might have caught out quite a few people, because the moves before it was pretty nasty, and it was clearly leaked. But anyway, this is the market, and you can do nothing about these leaks. People always get it before you do, so just got to try to make the best of it, and that's that. Come to next week now. On Monday we have a UK bank holiday, but we're going to have an inflation report out of the UK next week, so hopefully that will provide some good volatility. We've seen the UK markets in terms of short sterling come off quite a bit after the MPC minutes, saying that there'll be no more QE, but I think after this, the minutes and the fact that we've had bad UK data, I think we'll see a bit more of a dovish tone, and we might see a bit more move back up in short sterling, so it'll be interesting to see what happens there. But yeah, anyway, till next week, good luck in your trading. Hopefully we'll see a bit of a pullback in these spreads, and if not, average more into it, and hopefully it comes back then. I think it's at a level anyway. And until then, speak to you then.